We've almost went bankrupt twice throughout the history of the company.
What was that experience like?
The first experience was in 2015. We failed to fundraise. The second experience was the big tech winter that now everyone talks about happened 2022, 2023. Very painful experience because it happened exactly after the big excitement was very high, and then suddenly we find that the ecosystem doesn't fuel aggressivity anymore. When you are threatened to be bankrupt, all you can think about is just to survive.
So you're profitable now. What is the next step? Hi Brian, SIRCLO became profitable in 2025. Congrats on that.
Thank you for the support from Vertex and the team as well.
So SIRCLO is not exactly a startup per se, right? You've been around for 13 years now.
Yes.
So what has been the journey like so far?
Yes, you're correct that this year, 2026, will mark our 13th anniversary. We started back then in 2013. For the past 12 plus years has been ups and downs. We've almost went bankrupt twice throughout the history of the company. We began, back then as a SaaS company. And then after a few years, we kind of pivoted to more like an e-commerce enabler for enterprise clients, which essentially, I think at the root of it is the same thing all along. We are a tech company that wants to help the businesses, the principals, the brands to go more direct to the consumers.
So when you guys started as a SaaS solution, what was it solving?
So, very simple. Back then, first service that we did is something very similar to Shopify today.
Yeah.
So in fact, Shopify was already a thing back then. I remember, when I started SIRCLO, I said this to myself, maybe not publicly, but to myself that, hey, if I can do, just a few % of what Shopify can achieve for the Indonesian market, that's already awesome for me. So that was the beginning of the journey, which unfortunately, after a while, we concluded that it was not exactly the solution that the market required at the moment.
So then the conclusion was to be like a full stack e-commerce enabler for large businesses, right?
Correct.
What does that mean? Like, what does it involve?
The Indonesia landscape of e-commerce itself is still very dynamic. I think there's a lot of friction and problems to be solved, not only on the storefront capability, but also from fulfillment, customer service. So there's a lot of, things behind the scene, behind the storefront that requires solving. So that's what brought us to the conclusion that, hey, if we really want to help the principals, the brands to get more direct to the consumers, we cannot only just help them build the storefront. And specifically about the storefront itself, I think when we started in 2013, it was still very young. The ecosystem was still very young. E-commerce was still very fragmented. We haven't had this conclusion yet that the e-commerce in the region is going to be driven mostly by the big platforms. But after a while, when we notice that, we say, hey, if we really want to help again, then why don't we help them to do very well in the big platforms, right? So, and again, behind the storefront itself, there's so many things, merchandising, customer service, logistics that needs to be solved. So we kind of become that partners for principals and brands to simplify so that they can focus on the product development, brand development, and we kind of solve all the teeny-bitty details on the e-commerce part so that, again, they can become closer and closer to the consumers directly.
You mentioned close to bankruptcy twice.
Yes.
When was that and what was that experience like?
So the first experience was in 2015. That was kind of the timing when we transitioned from the SaaS model to the full stack enablement. So we failed to fundraise. That's essentially what was it. And because of the fact that we are not or even far from being profitable, make us very fragile and yeah, like I said earlier, close to bankruptcy. Not every idea will make it successful, but we learn from it. And turns out, yes, we pivot and pivot took off. Now, the second instance, the second experience was actually not very far from today. That was when the big tech winter that now probably everyone talks about happened. 2022, 2023, very painful experience because it was actually it happened exactly after arguably
The
peak,
boom.
the boom,
Yeah.
right? So excitement was very high, and then suddenly we find that the ecosystem doesn't fuel aggressivity anymore, and so we have then to recenter and make difficult decisions. But then again, I think thanks to the energy that we have within, also the conviction and the continuous support from the shareholders that support us not only through the excitement of the ups, but also through the through the dark days, right? So we work together, make a couple of difficult decisions, downsize a couple of teams, shut down a few initiatives, and kind of refocus to what worked, which is our core business today, the enablement for the principles that we started back in 2016, 2017.
Okay. Okay. So you tried a bunch of things and realized that focusing on that core business of different verticals of enablement for e-commerce is still the market.
True, true.
Okay. So you're profitable now. What is the next step?
So I think first of all, the profitability level that we achieved itself in 2025 was, of course, very good and satisfying for us. In fact, actually, internally, it was better than what we expected. But we still see ourselves as being new to this. We see that there's still room to grow the profitability, the unit economics, even the market itself in which we operate still grow at a high rate. Of course, it's not like the kind of high rate in a bullish market, but even despite of the economic slowdown that a couple of people say, I think we remains growing consistently. So what we mean by next step is to be more and more well governed. I think being more mature as an institution, so that we have optionality whether perhaps to do more expansion or to even probably consider an IPO. So a couple of options that we are thinking about as we speak. But yeah, that's pretty much what we are doing now.
Was there a moment where you decided that, okay, I'm ready to do maybe try to list?
I think specifically on listing itself, it's not exactly something that we have yet planned very specifically. But 2026 itself, we kind of frame the overall readiness or things to be done within a set of OKR that we call fit and aim. So we can talk about specifics, but generally we are talking about how we can become fitter. So it talks about profitability, governance, technology backbone, those kind of stuff, to make what we achieve in 2025 was not just a thing in a year, that it can be sustained over a long period of time. But on top of that, we know that if we just talk about that, there's no excitement in it, right? I mean, and we're here in the market that is still young. There's still a lot of opportunity, so we want to aim for more. And more here, I think, is related with a few things. One is, Indonesia is bigger than Jakarta. I think a couple of our activities or even the way we think about our business today is still somewhat, Jakarta centric. I think there's a lot of potential, and even the big platforms and a couple of reports indicates that things or areas outside of Jakarta is ready for digitalization, for growth. And then topics about AI efficiency or productivity. That's also a thing that, of course, globally, a lot of people say how, all this AI advancing very rapidly. Within our company, we've spent a fair amount of time in the past year to see how we can implement, not necessarily, to kind of rebuild what's there, but how to implement what's already there into our specific domains. So that's another element to what we aim forward. And also, lastly, I think we think about how more and more we see that the divide between sales and marketing, I think to a large extent, a couple of people will see that we are more of a sales partner, sales channel partner for principals or brand. But more and more, like for example, including the growth of the phenomenon of TikTok, kind of dissolve that divide between marketing and sales. It's a channel for sales as well as marketing at the same time. So we are also trying to do more and more innovation and capability building around that topic. So I think that's probably more of what we do today. Again, go back to your questions. Specific about listing itself is not something that we are yet have specifics about, but we do everything necessary so that we have optionality, and most importantly, we can sustain the momentum that we are having right now.
So you spoke about governance, and the Indonesian startup ecosystem has been tumultuous in the last few years. So how has that changed your thinking as a founder operating in the ecosystem on specifically topics like governance?
For a lot of us, including for ourselves, sometimes it's difficult to grasp and implement the balance between, being innovative. If you remember, back then we keep saying that, go fast, break things, and so that's the jargon of the industry, right? But at the same time, I think it's very important that when we say break things and move fast and break things, it talks about risks that we should be willing to take calculated risks, but not to kind of bypass what should be done well in terms of governance, check and balance, and transparency, for example. I think you can definitely take risks, experiment things. It can be successful, it can be a failure, but do it in a way that holds integrity. Like for example, I think what we say, what we do internally with the employees, with team members, and what we report to the board, I think has to be consistent. I think that is something that we try to hold also throughout the journey of the company. And there's this one instance I remember, in the past that when the company, almost went bankrupt, and we have this, like kind of heart-to-heart talk with shareholders and say that, hey, I think we would rather fail with integrity rather than successful without it. Right. Yeah. So I think that's I think, of course, it's always easier said than done. Even for ourselves, the fact that it is a topic that we also hold within the company this year is a way for us to say that, there's always things to be improved. We don't have anything we are worried about intentionally, but unintentionally sometimes because of, the lack of maturity of the organizations, or even for myself as a founder, I think still provides room for continuous improvement for us to be more and more well-governed and, kind of institutional or public.
Yeah. So at what point did you start putting all these things in place?
For us, I think it was a gradual thing. So, of course, I think things that are more, like for example, I think if we talk about financial audit, it's something that we've done for many, many years. So even back then, we already noticed, simple things like financial audit is a basic necessity. But more and more, I think today we start to talk more and kind of establish like things like internal audit and implement systems like a proper ERP, WMS, data management, with proper check and balance and security measures. So these things are more recent. I think I would probably say different for every topic, but maybe in the past few years only. That was our journey on governance.
Yeah. You mentioned ERP, WMS, data management. These are expensive, no? So at what point you felt you were ready to do this? Why is it important to have all these structures in place?
Right. I think
Tech infrastructure.
Yeah, even though it's not easy sometimes, but we try to always, justify it by some modelings, financial modelings. When we talk about WMS, lack of proper WMS within our business might mean loss of inventory, right? Or loss in terms of reverse logistics, right? Return. So e-commerce, have a few percentage of return for sure. So without the proper WMS, we will not be able to reduce that, and that is money, right? So this is an example where we can actually play around with the models and see that yes, doing it is expensive, but not doing it is more expensive.
Yeah.
Right. So, and that kind of guide us also all the way. Like in the beginning, maybe of course we cannot go with an enterprise grade solution because our scale is not that much yet. Right. The economics doesn't justify it. But as we grow, I think we have to keep reassessing whether the infrastructure that we have today is appropriate for our scale.
You're profitable now, and a lot of good governance practices are in place. And then you're also investing a lot in tech infrastructure.
Yeah.
So this gives a good base for you to really scale, right? And one thing that you mentioned is about AI, transformational tech. So how do you see AI and implementing AI in your business?
It's inevitable that I think everybody today has to assess what's happening in the development of AI and see what's available there and can be implemented within your company organizations. The key success factor here is that for us to be the best implementator or customizer of those things within our domain, which is again the enablement of our clients, principals, and brands to go direct to the consumers. So the first thing that we have started doing last year was to build a series of AI agents that kind of remove the burden of all the repetitive tasks that our account management and store management do. So if you think about SIRCLO office, right? So we have hundreds of people in the company today. They are working very hard to grow and optimize the business of our clients or of our principals and brands. So we talk about optimizing the listing, the campaign, the creative like pictures, videos, captions. So all these things, some of it actually can be done way better now by AI than human because it gives consistency and occasionally it can give also or boost creativity and intelligence to the process. So we have started doing that in the past year. We have first experimented it within a few teams, and as we speak right now, we are going to roll it out across the company.
Based on your Fit and Aim framework, AIM has AI, and then you also talked about going beyond Jakarta and expanding across Indonesia. And your model, you don't have your own warehouses, right? You work with existing warehouses.
Yes.
So one thing is, so it's more capital efficient, but then it also has its trade-offs of like not fully owning the stack, right? So how do you work around that?
So interestingly, I think this is one of the lessons that we acquired as well throughout the ups and downs of the company in the past. So we've learned the hard ways that I think there's a lot of things that has been done well actually. And it's not necessarily wise to reinvent the wheel. The assets are already there, the people already have the processes in place. So instead of reinventing the wheel, as I said earlier, I think it's wiser now. The approach is to connect the dots or orchestrate the points in which currently is kind of spread out into one integrated network. So what we do today is, for example, one of the initiatives to capture the growth or momentum outside of Jakarta is that we notice that there are more and more e-commerce demand from outside Jakarta, outside Java. But it's definitely not efficient for us to ship out the goods from Java or Jakarta. But it's also not equally not good if we have to then reinvent or rebuild the warehouse every time we say, okay, we want to go to that city outside of Java. So instead today, we realize that actually, hey, in almost every cities that we want to go to, there's already either distributors, warehouse partners, or even retailers that can be our partners. In fact, for some of them, they already have the inventory because they've done the products of our clients for offline market.
Okay.
Now the question is, can we connect the online demand that we receive from the e-commerce stores all the way to that fulfillment point? So that is the thing that we orchestrate as we speak right now. And again, the idea is that we shouldn't, too itchy to do everything by ourselves. Yes, it might mean losing some controls, but at the same time, I think you cannot have everything all at once. Having the control, having the efficiency, the speed. So for us, this is what worked best at this point in time.
Okay. Yeah. The other thing I wanted to also touch upon was 40% of the e-commerce is via TikTok at the moment. But what was it when you started? Like, what was the kind of go-to-market in 23? And how has it changed to now TikTok being a major player?
Yeah, that's very interesting phenomenon, and it's a thing that we witness like firsthand from the beginning, right? So because we've started doing all this enablement since before TikTok was there, and then when TikTok started to pick up throughout the ban, if you remember, end of 2024, there's a quarter where we lost TikTok for a bit because the government banned it in Indonesia, and then came back stronger in 2025, 24 and 25. So it was very interesting. And I think for us, it is precisely the reason why our clients and principals chose us, because it's our job to be agile and adopt all capabilities required to perform in all e-commerce channels without many hassle for our clients. So, and that can be done because I think certain parts of it is actually the same. I think, like, for example, the network of fulfillment, the customer service excellence, the supply chain is a thing that is, I think, relatively speaking, similar from one channel to the others. But yes, on top of that, the go-to-market itself, like what you said, is changing. Like the catalog base, I think if we generalize, previously, what we think about e-commerce is catalog-based e-commerce platforms, right? Where you go with some intent, you browse around through catalogs, and now suddenly with TikTok, most of the transaction actually not happen in the catalog model,
it's very
even though they have one, but it happens mostly on the content-based activity, like short video or short video through affiliates or live streams. So that's an area where for us, we have to learn it again. We have to expand our capability. So throughout the past few years, we have recruited a few new team members with a bit of skill set that is slightly different from what we had in the past. We also have built a couple of new infrastructure, for example, studios like this, but not for podcasts, more for live streaming. So we've built those kind of things to adapt ourselves to the phenomenon. And as I said earlier, generally what's also interesting, I think, is the phenomenon in which marketing and sales becoming more and more integral. In the past, there's a marketing department talking about spendings in Google ads and Meta ads, all that. And the sales department talks about the conversion specifically in the channel. But now I think with TikTok, it becomes more and more together. So even for us today, I think more and more discussion that we have with our clients will involve both sales and marketing department all at once to see how we can optimize it together. So yeah, but anyway, I think we don't want to say that we are know it all the way. I think the environment or the industry itself keeps changing. Who knows, in the next 1 year, 2 years, things will keep changing.
Yeah. So this live commerce thing, right? Do you think it will get as big as it is in China, also in Indonesia? Because everywhere else it has not gone as big.
So it's hard to say that we will be exactly like China or any other particular market elsewhere, because of course every country has its own different characteristic. Even among Southeast Asian countries, right? The 6 countries in Southeast Asia that is relatively advanced in e-commerce has a bit of different flavor from one to the other. So it's hard to say specifically that it will become something like China. However, I think we have high conviction that yes, live stream or content-based commerce will be a big part of e-commerce. So that's why we don't have any doubt or conviction in terms of investment in those areas. That's why we keep building our capability, infrastructure. We put our resources and investment in that area because we see this is not going to be a thing of a year or two. It will be for many years to come, and it will keep growing.
Going back to your framework, the fit and aim.
Yeah.
Aren't they a bit contradictory in the sense like one is about setting processes, governance, infrastructure, financial sustainability, those kind of constraints, which tends to slow down companies in terms of both growth and also probably innovation and other things. And then you have the other things where you're trying to really scale, innovate, change with times, etc. So how do you manage this?
Right.
Is this a challenge really?
It is. But in the past few years, actually, we've also been having, those kind of 2 factors that we want to achieve. One is the stability, the profitability. The other one is the innovation part. And to be very honest, we failed actually in the past few years. We are mostly being more stable, prudent, and profitable than innovative. However, I think what's different this year is, of course, also the fact that we have achieved a significant milestone as being profitable in 2025, which kind of give us a bit of at least room to not be too tight in terms of being focused on profitability. When you are threatened to be bankrupt, I mean, all you can think about is just to survive,
Yeah.
But at certain level of stability, then this is exactly the time when you can then, start to open up your mind, your time, your resources to other things that might fuel innovation. Now, as we speak, we are also being mindful that, this is a tricky period of time because the exact balance is what we have to strive for. Losing too much discipline, allowing too much risk taking might, risk the profitability, the stability that we have achieved. But I think one principle that we perhaps, kind of remind people within about these two is that even though it's difficult, but if we zoom in hard enough, some of these fit components are exactly what is required for you to build the aim. For example, let's talk about AI innovation. Last year, when we initiate the task force, it actually opened up, realization that we still have some homework to be done in terms of having clear workflow, having a well-structured data management, right? So, yes, it on the surface it might seem very contradictory, but at the same time, if we zoom in enough, some of this fit is really the foundation in which then you can develop your innovation on top of, right? So this is one example. And of course, it's not very easy. It requires some thinking. It's harder than just choosing one over the other. But yeah, that's what we are trying to do now. And hopefully, again, I think with the fact that we have achieved certain milestone last year, this year we can have the room and we are given the discipline to juggle the balance between the two.
Before we move on, why did it not work the last year?
Because last year we started from the red and try to turn it around to the green, right? I think this year, going from being green at certain percentage and probably potentially growing it to another level of profitability, I think gives us at least a different level of existential crisis, right? It is not red or green. It's green with this percentage or more percentage, and what compromise we can take, right? So we can start talking about the short or the long-term bet. In the past, last 1 or 2 years, not so much.
A lot of Southeast Asian IPOs recently, tech IPOs recently have not done pretty well. And you briefly mentioned about potentially listing at some point. Do you think SIRCLO can do well?
What do you think is the reason why it's been not so successful for the previous listings?
Maybe the market opportunity is not as big as has been projected. That's
So
one.
it's expectation. So that's about expectation and managing expectation.
Yeah, that's one. And the second thing is also the governance issues.
Governance. Yeah. So expectation and governance.
Yeah.
So those two.
And then also generally the macro trends and economy has not been doing well recently.
Yeah. So the general economic climate, governance, and then expectation, right? So I think now coming back to us, I think we pretty much focus more on what we can control first this year. So the fit and aim goals, or all those other things are more of a top priority for us. Now, if we end up choosing to go public, exactly the areas in which you mentioned earlier, I think the economic situation, governance, expectation are the things that becoming a burden for the previous examples. So, but among all those, not everything is within our control. Again, so the things that we cannot control, we try to make peace of it. If you can't control, I mean, there's a saying: you can't control, you just accept it, right? But what we can do is then, kind of be focused, be clear about the things that we can control and work on that. I would say that in the past, there's too much of or too high of a bullish expectation about the market. I think we sometimes getting alert by the fantasies of how Indonesia can be or Southeast Asia can become like China or can be like Silicon Valley. Reality is, it's not. It's different. GDP itself, we can see it's a number. It's a hard fact number. So I think I'll probably say that it's foolish for us to, just foolishly believe that, 1 or 2 brilliant idea will suddenly change the region into becoming China or US. It's not going to be. So I think there's some recalibration of expectation that it's a unique region has a lot of potential, of course, but at the same time requires a lot of homeworks and some patience in the process.
Are you still positive on Indonesian startup ecosystem?
I need to because we are in Indonesia, but I am because potentials are there. But I think our own experience in the recent years with the ups and downs remind us that potential requires a lot of hard work with good governance to turn it into results. And that's our job. But potential is clear
Why do you say that?
because it has huge demography. Economic is growing well. I think there's more and more confidence also on how the government want to, increase the productivity and the economy. So yeah, I think there's a lot of reasons that the country will be bigger and better. But I think instead of startups ecosystem, seeing ourselves as just the beneficiary of those momentum and growth, I think we should take the opportunity to be the workers of the movement as well. So that's what coming back to the point that, potential will not turn itself to become results. But the potential is there. We have a lot of resources, both natural as well as human resources.
Any last comments before we end the conversation?
All right. I think for us, given the state of the company today, we are excited to see what's next. Of course, I think there's still a lot of challenges ahead, but I think we are being optimistic that I think we can create more and more good news. Particularly in SIRCLO, I think we are bullish on, more innovation can be done. And I think how we can tap the opportunities outside of Jakarta and Java, perhaps even, outside Indonesia. Again, it's a long way for us to be as great as China or US, but this region has a unique potential and we are on it.
Great. Thank you so much for taking the time to do this, Brian.
Likewise. Thank you, Rahul.